Hey, this is Jeff with Union Home Mortgage. This has been a very impactful week for the financial markets and our economy in general. I want to focus on one thing that I learned early in the week that is great for the housing market. So Fannie Mae and Freddie Mac have had a mandate to annually increase their portfolio by $40 billion each. A couple weeks ago, it was announced that they were going to increase that to 200 or 250 billion between them, which provides liquidity in the financial markets for housing. So when we do a mortgage, most of the time those go into a pool and it gets turned into something called, essentially it becomes something called a mortgage-backed security. Investors like life insurance companies, pension funds, people seeking a stable return on their money, invest in that. And I say people, meaning companies too. So these big time investors looking for something stable, invest in the mortgages, in the mortgage market, which frees up money for everybody else. Well, Fannie Mae and Freddie Mac also do that. Now that extra 200, 250 billion increases liquidity, which means that credit is easier to give and the money recycles faster when there's more investors. So, but recently in the past week, that number's been increased to $450 billion mandate. Now, it's not thought that that investment will happen all at once. It's supposed to happen over the next 6 months to a year, which provides stability for the housing market, stability for rates, the availability of money to lend, and all that helps keeps things a little bit more affordable than if it wasn't there. So if we can increase housing inventory and keep the liquidity in the markets, this is great news for 2026 and beyond. So don't be afraid to buy a house. Don't think the market's going to crash. The government's doing what they can to keep things stable and as affordable as possible. Hope this helps. If you have any questions, feel free to leave them below or give me a call if you have my number. Take care, and I look forward to talking to you.